We're probably going to get started. Welcome, everyone, and thank you for joining us on this next four-part webinar series. I'm Carryn Hills, manager here at Lincoln's. I work predominantly in business and ag and have a special interest in business improvement and advisory. I'm joined today by Brendan Taylor, a partner here at Lincoln's, who I'm sure most of you already know or have at least seen in previous webinars. So a bit of housekeeping. This is my first webinar and I'm not super techy, so excuse me if I fumble my way through the screens. The content we are delivering is going to be at a really high level, following some very simple tools and concepts. Some of you might have much more complex business models, so the examples used won't necessarily talk to that very well, but the concepts remain the same. I think with all things discussed, if you think it's an area that you'd like to explore further with assistance, please either contact ourselves or your own accountant, and they should be able to help you further. So while we're delivering this series of webinars now, I'm sure you've seen that there have been plenty of webinars and articles and options as far as COVID recovery programs and for businesses to pivot and adapt, and the list goes on. To be honest, we've sat back on doing this for a bit because I think everyone is a bit tired after COVID. It's been a big year of change and uncertainty. And I think for most of us, that translates into a difficulty in being motivated and future focused. But spring is sprung and a lot of the government measures are drawing to a close. So it's really timely for us to look at what that means for all business and all of us. Hopefully the content we're delivering isn't only relevant for now, but for continually improving your business. As a quick summary of the session, in a bit I'm going to hand you over to Brendan to say his hello. We'll then take a look at a quick timeline of the government measures and when they're ending. After that, Brendan will be targeting cash flow needs, what to look for, where to source, etc. And then I'll come back with two really simple tools that businesses should always have to mind: a simple cash flow budget and a break-even analysis. Throughout it all, feel free to ask us questions in the chat box and we'll try and answer them as we go. If the answer is a bit too long, we might respond after the webinar, but we'll try and see how we go with time. We'll try and have a recording of this probably uploaded onto our website, but we'll send a link to you. So if you want to go back and revisit anything, feel free to. Okay, over to Brendan.
Thanks, Carryn. Hi, everyone. Welcome. Thank you once again to one of our webinars. We've been doing this quite a bit in the last few months and thoroughly enjoying it, and hopefully you're getting something from it. So just with this particular one, today's one, don't be too put off by the heading, business recovery project. It's probably more about preparation than recovery. Recovery is a connotation that everyone's in trouble, and that's not necessarily the case, except for this. We are officially in recession. So what is a recession? Recession is basically 2 consecutive quarters of negative growth. So January to March was a small negative, and then April to June was negative 7% GDP growth, and that's the biggest ever, apparently. So, that sounds pretty doom and gloom. So what usually happens in a recession? People spend less, businesses are firing instead of hiring, business investment spending falls. But that hasn't really happened this time. And that's almost entirely because of the government intervention: JobKeeper, cash boost, home builder, tax incentive write-offs, lease payment holidays, loan deferrals. They've all softened the effect of what would otherwise have happened. So it's really anybody's guess what will happen next. The economists mostly say the worst is over. I'm not so sure. We feel everyone should really prepare for all possibilities. By prepare, we mean prepare for the finish of JobKeeper. Prepare for the effect of recession, whatever that will be this time. Prepare for if there is actually a burst of activity post-COVID. If there, that's a very likely scenario because people have been saving money. So it's one of those big unknowns about this situation. Prepare for if the state borders remain closed for another year, imagine. And be prepared for whatever other unknown is out there. So this feels like a time more than ever than before that we must be prepared. So when do all the incentives turn off? Carryn?
Great. So just as a summary of the different COVID support things that have already been supplied. So we've had the cashflow boost, JobKeeper, Centrelink support such as JobSeeker, etc., payroll tax, rent relief, loan repayment holidays, accelerated depreciation options, and home builder. And that's not including some of the other smaller things here and there. So we've done a bit of timeline. Just give me a sec. And I'm just going to go through so that you can see visually when each measure stops. So what's already happened is that there's been a gradual return of mutual obligations for people on JobSeeker. That means they've now actively got to show that they are looking for jobs again. Payroll tax for those that have a lot of employees and a high turnover has kicked back into effect. So July is now due for payment. The 550 coronavirus supplement to Centrelink receivers is going to go down to 250 on the 24th of September. By the 25th of September, directors again become liable for trading insolvent, and the assets test and liquid test gets reintroduced through Centrelink. On the 27th of October is the first round of JobKeeper ending. Now, for most of our clients, we're thinking that JobKeeper 2.0 won't really necessarily be a thing. However, we are checking and retesting everyone again. So that's going to be quite a big hurdle, I suppose, as far as cash flow goes. By the 30th of September, the end of the moratorium on evictions due to non-payment of rent, that's quite a mouthful, and the end to freeze on rent increases and penalties for tenants who do not trade or reduce trading hours. On the 28th of October, you're due to receive your final cash flow boost payment, which has been quite substantial for most business. On the 31st of December, the rest of the coronavirus supplement payment finishes, and home builder contracts have to be entered into in order to get the grant. 3rd of January, JobKeeper retest again for the next JobKeeper lot, again at the further reduced rates, and by the 28th of March, end of JobKeeper completely. As it stands, I mean, all this information changes by the week. However, this has been pretty consistent for the last few weeks. So from there, we're going to just have a bit of a chat with Brendan on what your cash flow needs are. And we'll start with the first question. So Brendan, what do we need?
Righto. So what do we need? You firstly got to understand the power of capital. So by capital, we mean two things. Short-term capital, that's working capital. And working capital is cash or anything that's quickly turned into cash. And then the other is long-term capital. So long-term capital is capital for investment in property or equipment for production growth. And those, and in long-term capital, that they are for profit-making activities. Just for today, at this time, and given the uncertainty in the economy, we think you should be concentrating on that short-term capital, the working capital components of your business. So that's really what we've got to concentrate on today.
Great. So how much do I need?
Well, yeah, that's the big question really, isn't it? This is where you really need to put some effort into your planning and budgeting and calculating, because what you'll need, you need available funds. And what we mean is cash or close to cash or quickly turned into cash, or the other term is liquidity. And you need that at the right time because, as you know, cash comes and goes. And there'll be times when it's there and you don't necessarily need it at that point in time, but there'll be times when you need it and it might not be there. So, and then, how much? You've got to cover a number of things. You've got to cover all of these. Firstly, you've got to cover your business overheads. That's basically the cost of keeping the doors open. Your rent, your power, some of those things. plus you have to cover the costs that make you earn your income. You know, what is it that you sell? Do you sell labor or do you sell product? So you need to have the costs of providing that, the cost to cover your wages and the cost to cover your stock purchases. Plus, on top of all of those, you need to be able to cover your loan commitments. That's the principal and the interest. Plus, you've got to also cover your compliance costs. And that, by compliance costs, we mean tax, BAS, pay-as-you-go for employees, and superannuation. And then the final main other cost is the cost of your own wages or your drawings or your living costs. So you consider all those things: business overheads, the costs that make up your income, loan commitments, compliance costs, and your drawings. If you can't cover all those costs within a reasonable time, say a week, then you've got a working capital shortfall. And if this continues for more than a few weeks, then your business is really going to suffer. Something is going to break. Also consider this: that cash shortfall doesn't only happen in recession or quiet times or off season. It can also happen in high growth times. You know, during high growth, you know, like that burst of activity that I was talking about, you have to pay for those extra wages and that stock before you get paid. So it's not a profit issue. You're probably profitable in that situation. It's a cash timing issue. You would know, of course, that profit doesn't always mean cash flow. So whether the next 6 to 12 months means, you know, a burst of business activity or a slowdown, you must not ignore the need for working capital. It has to be a focus. We believe it has to be one of the major focuses at this point in time. And you may need some tools to help you visualize this, which Carryn is going to talk to you about later on and illustrate and demonstrate. So, and a couple of those tools are break-even analysis and cash flow budget.
Great. So where does it come from, the cash that we need?
Well, cash comes from all over the place, really. And of course, when I'm talking about cash, I'm not talking about folding notes of cash. I'm talking about available funds. So just to clarify that, cash comes from all sorts of places. However, in a business situation, cash is hopefully starting off in your bank account. And that may be your credit bank account balance or your overdraft, you know, within your overdraft limit. It's available funds. It also comes from collecting your debtors, because if you sell on account, then people will generally be owing you, and you need to have a pretty good debtor collection policy in play and gather that as quick as you possibly can. You just don't want to be becoming someone else's bank. Cash comes from business activity, more sales. You know, the more you sell and convert to cash, that produces cash flow. Cash traditionally in business situations comes from borrowing from the bank. And at the moment, we've been told a number of times talking to the banks in the last few weeks, we are open for business. They've just been handed from the feds an absolute truckload and been told to go and put it out into the system. So they've relaxed their lending criteria to get it out there in the system. Where else does it come from? Another place it comes, cash flow comes from, is cutting your costs. Now, this is something you probably should be doing regularly anyway, is keeping a handle on your costs, and I'm sure you are. But another tool we won't expand on today, but available, is a tool called a waste audit, and we conduct this pretty regularly. And you need to, if you want to talk more about that, you're welcome to do so. Just give us a call. Where else does cash come from? You know, you can redraw on your home loan if you've got that available. If you happen to have personal savings in bank accounts outside of the business and you're prepared to provide that for the business cash flow, it might come from there. Cash can also come from a credit card. Utilise credit cards for short-term debt funding if required. It's expensive, but if it's short-term and you pay it back quite quickly, it's probably a fairly cheap form of finance, no fees, and it's quick. Cash flow can also come from equipment finance. We still see people wanting to buy vehicles and equipment on an overdraft or their business account, which can, in some cases, hamstring the cash flow of the business. So the rule of thumb with equipment finance is, finance an item over its useful life. So a 4 or 5 year term equipment finance is very valid. There's also those third tier type lenders with slightly higher interest rates, slightly less security offered. Businesses like Albany Finance, for example, provide that type of funding, and it can be done and turned around quite quickly. The one you probably want to avoid, source of cash, and no doubt you see these ads on TV. Those lenders of last resort look very attractive, but horrifically expensive. Nimble, Wallet Wizard, Breezy, all those things. You can get approval in 5 minutes, but those interest rates vary between 30% and 300%. So avoid, please. Let's just look at the most common and most likely source of finance, the bank. Some say an evil necessity. I say probably one of your best business friends.
So what does the bank need? Okay,
so most banks ask the same questions from you to provide, to enable them to make an assessment of your credibility for credit. They need a number of things. They need financial statements and tax returns. Often they ask for 3 years worth. The point here is be organised. Make sure that your record keeping is up to date. If you think that you're going to need funding from a bank, get the financial statements going with your accountant as soon as possible. Other things they need, this is an absolute certainty, is a cash flow budget. You should be doing this anyway, and this is what Carryn will talk about more later. And it really needs to be realistic. And it'd be handy if your cash flow budget showed timing, not necessarily just your actual sales, but the timing of the receipts of your sales, for example. Another really important document with borrowing is the banks like to see a statement of assets and liabilities. Now we do these regularly, update regularly for all our clients, and it means assets with current market values, not just straight off your balance sheet. Another thing that's quite handy is a quick story, the reason for your borrowing, and maybe a little bit of history if your bank doesn't know you that well. You obviously need to provide them security, so where the security is coming from and the details about that, if it happens to be property. Providing all these things up front just makes the process much quicker. Another thing they're asking for, and have been for a number of years now, is a copy of your ATO portal accounts. Now, these must be up to date with payments. This is your tax account, your integrated account, which is your BAS and your pay-as-you-go for employees. Basically, they're saying, if these aren't up to date, don't even bother applying. If you owe the money to the ATO, that is the bank's quick test of how you're going. So if you're not up to date with those accounts, then you need to sort them before you even start the exercise. Also, other things, slight additional things you need to be able to show is servicing of the debt, ability to repay. And so we expect that will be shown either by your financial statements, but certainly by your cash flow budget. Personal spending is an interesting one. In the past, the banks have just presumed that everybody spends the same, that it might be $60,000 a year per family to live. That for example, they just used some type of benchmark. Now they do a lot more homework on this. They often ask for copies of your last year's bank statements, and they go and assess your personal spending. So I think there's a lot of value in you giving some, getting on the front foot and providing some of this information. Another thing, basically, we're saying get your accountant involved, give authority for the banks to talk to the accountant. we actually can make a difference. We can enhance your story, and for some reason, we give credibility to your application. Another couple of little ideas: meet with the manager rather than by phone or email. And a great thing to do is get the manager to come to you, showcase your business and some hospitality. It actually still works. The manager is, still has a very strong influence in the credit decision. And the other thing is, remember this: the bank wants you just as much as you want them. So you still have the opportunity to negotiate fees and the interest rate, and don't be scared to do it.
Great. What else should we think about?
Okay, so there's a couple of other things, maybe, there's lots of other things to think about, but a couple of things that come to mind in relation to managing your cash flow is, and protecting your cash flow. Be careful who it is that you're selling to. Are you sure you're actually going to be paid? Consider this: your customer could actually also be coming off stimulus. If you deal with business to business, they could be coming off stimulus, and they could be having similar cash flow issues as your own. So put some effort maybe into some research prior to lending or to providing credit to people. Another thing to think about: be wise, I guess, about how much you're drawing from your business. Yes, you have your own personal living costs and obligations and requirements and lifestyle needs. But if you can, maybe just leave a little bit in the business during these times of uncertainty. Last thought, maybe, about what else to think about: look for opportunities. This is actually an extraordinary time. Habits have changed, spending has changed, and you just got to think, where can I capitalize on this? Don't let the lessons of 2020 be lost, by the grind of your day to day.
Thanks, Brendan. Just so what is going to go next, I'm going to just share my screen, and I'm going to show you how to sort of set up a basic cash flow and things to look out for and how that goes. So just give me a sec. Right. So here is our very simple template of a cash flow. A cash flow is generally quite a straightforward exercise because most businesses are quite consistent year in, year out. I will say though that this year it's going to be a lot harder for most, and that's because the market is a bit volatile. Like we're seeing people have peaks in business that they weren't normally peaks in, and it was normally previously really quiet, and troughs in areas where it was used to be busy. So you're going to have to give it a little bit more thought than you have previously. A good starting point for any cash flow projection is to basically pull the last 12 months from your accounting software as a profit and loss. If you take that data and input it into a spreadsheet like this, all you then need to do is give some thought about your behaviors and what's changing. So you're looking at things like, have I introduced new product lines or services? Have I had a change in customers? What is happening in the world around me that's going to affect my sales and turnover? So that's really going to be the hardest point to figure out, is how am I going to get my sales right? Costs are generally pretty consistent. We all understand our costs, and really the only thing that's kind of negotiable there is, can I get better results? Can I change the timing of where they land? Things like insurance, is it something that I can fund rather than paying it all as one big lump sum? In this example, I've just taken a sort of median range company or business, sorry, it's a partnership, I should say, and I've given it a seasonal flux just so that you can see over summer it's a little bit busier. I've also brought in the last of the 2 cash flow boosts and the last of the bit of JobKeeper, which they had 1 full-time employee at that time. Working down, you can see it's pretty stock standard: accounting fees, bank fees, filing fees, and all the rest. I've gone for materials as a percentage of my sales because I know that I'm always aiming for basically a 60% markup. And extrapolated that all the way down. So there's a lot of functions in here where, you know, your superannuation is calculating based on your wage. So you only need to input some of the areas. Now, that gives me my costs, and then I've got some capital costs of which I spent. So I've highlighted this in this lovely green color, basically just indicating that, you know, during COVID, I've taken the opportunity to pause all my lending payments, my loan payments, and those are due to start now again in October. I know that at the start of July, I have an opening balance of about $2,000, and that extrapolates down and around, and you can basically see what my closing bank balance I expect to be month in and month out. What this allows me to see is that I've got a peak debt situation happening or expected to happen in November. Now, if I'm hoping to fund that either with an overdraft or outside lending or something like that, I need to start now to kind of get that into place, because otherwise I'm not going to leave anything with enough time to kind of get it there when I need it. And that means, you know, putting those things into place, like calling your accountant and getting your financials done. Sorry, I just need to cough. Perfect timing. Anyway, and that's basically giving you the basis of a cash flow. It is not complicated. It's really straightforward. One thing I want you to be aware of is that we also have drawings in here. Now, when we're doing cash flow, we always underestimate how much we spend on ourselves. And it's easy to kind of just go, you know, about 3,500. You can either pull this information far more accurately from your software, or as another rule of thumb, just try and give it some more thought. One of the best ways of doing that is to actually look at a business, what we call, I've just lost it, a break-even analysis. The cash flow is sort of a top-down. You're working from the top and you're building your costs and you're getting to your end result. The break-even analysis is almost the exact opposite. It's working from the bottom to figure out what the top needs to be. Once you've done the cash flow, it's already mostly built for you. You're going to take your running costs from that cash flow and pop it into there. The things that you're going to leave out is your materials or anything that's a cost of sale. And you're also going to leave out things like motor vehicles, only because you're going to split it out slightly further. So you can see what your yearly running costs are, your yearly motor vehicle costs, and then your loan repayments come into it again. And then drawings, this has got a lot more detail. So you go, oh, actually, I completely forgot that I still pay my, you know, my home loan through the business. That needs to come into play. And then I normally also pay for my private cars running through the business as well. So that needs to come into play. And all of a sudden, what I thought my wages were of 42,000 actually land up a lot closer to 90. So we build that through. We've decided in our business that we're not going to have the cash flow to put any capital improvements in place this year. But another thing that I forgot when I was doing my cash flow is that I still have to pay for last year's tax, because generally you're almost slightly lagged. So I've got my tax in there from the previous year. When that comes back through, it builds a schedule of your overhead expenses, and you work out with what your annual spend is. Now, I know that I'm always trying to get a gross profit percentage of 60%. That means I need sales of 468,000 in order to meet that expenditure, that level of expenditure. When I built my cash flow, I only had 300,000. And that was already taking into account all that additional cash that I was receiving from the government measures. That means I've got a lot of work to do. And then what also happens if my suppliers increase their pricing and all of a sudden my gross profit percentage drops down to 50%, I've now got to have $562,000 worth of sales in order to meet the same costs. Where can I cut my costs in order to get these percentages to work for me? Or where can I improve my sales? What can I get sold faster at a higher turnover? So those are two of the things that you need to look at and kind of revisit constantly. You know, it's always best once you've built a cash flow to go in and readjust it for your actuals and especially if you've had a particularly poor month, because what could happen is 2 poor months in succession can have a huge impact on your peak debt, and you might need to be really proactive about that. The last thing that we've got, so these are really very broad, and just a start of some of the tools that we're going to be showing you. The last thing that I wanted to show you was on our website, we've actually got 2 sort of business tools that's available for anyone to use. So if you go into resources and then business resources, there's 2 things there. There's a business health check. This is sort of a questionnaire for you to just get a feel for where you think your business is. It's just questions and answers for you to understand yourself. And the other one is the Growth and Profit Solutions Business Diagnostic. What that's going to do is it's a series of, like, you know, agree to strongly agree, but it's going to highlight the areas that you can work on within the business to get the best results of profitability, or whatever your best result is going to be. So those are available to anyone to hop on there and try and use. Likewise, if anyone is interested in either of our templates, I'm sure we're willing to share them. So you just need to touch base. Otherwise, that's pretty much us for the day. I don't think we've had any questions.
No questions.
Oh. Next week, we are going to be touching on staffing, so employees and what that means for the business. Brendan and Jenny Leonard from our office are going to have a chat to you about that. Just looking at maximizing and getting the best out of everyone, and what options are possibly available if you needed to downsize in that area. I hope everyone has found this helpful. And Brendan, do you have anything final to say?
Yes, a couple of things. Firstly, thanks for your time, everyone, on a Thursday afternoon. We're pretty keen to continue. Well, hopefully you'll continue to join us for the next 3 weeks, same time. We're trying to make them short and snappy and you know, to the point and relevant. So yeah, beyond the next one on workforce, Carryn will be involved in the one in 2 weeks' time, which is, it gets very interesting. It gets into opportunities and competitors and some of those things. And then beyond that, we're looking a bit sort of future focus type subjects. Just the thing about this situation that we're in, yeah, it'd be amazing if it doesn't end up being the recession that it could be. So, but you just think about the lessons that you learn and what the insights that you get into your business from going through this exercise. So we just encourage you, update your cash flow budgets, do a break-even analysis if you haven't done it before, just to get a bit of an idea of where you stand. And, you know, if we come out of phase 5 restrictions and things are all back to normal, that would be wonderful. But, you know, if things don't pan out well, if we end up like Victoria is at the moment, or some of the other states end up in the same situation, you know, things are going to be tight and tough for quite some while. Anyway, thanks for your time. We'll send email out to everyone, hopefully with a link to the recording on the website if you want to hear all this again. I'm sure you probably don't. And look forward to seeing you next week.
Thanks, everyone. Our contact details are available on our website if you need to get hold of us for anything. Thanks. See ya.